Welcome back to the Portfolio Series. I am your host, Foreman, and today we're going to be talking about the likes of Boohoo. Boohoo is a stock holding of mine. In fact, it's my biggest position. So today I'm going to be explaining why it remains my biggest position. I'm also going to be talking about the results that they've had for the first quarter, which were released yesterday, and also my own miniature audit or experiences when ordering through Boohoo. So make sure to stay tuned right to the end, as it might be quite interesting to find out if you've not purchased from Boohoo before, but you're interested to see how the service was like. And if you like the video, please drop one of these to beat that YouTube algorithm. So their results for the first quarter of 2021 ended at May 31st, which means that we are pretty much up to date, although these first few months are usually fairly lackluster. Regardless, their overall revenue growth was 32%. This was represented by 50% revenue growth in the UK, 43% in the US, although this was dragged down quite significantly by the rest of Europe by around 14% and the rest of the world by around 15%. This is most interesting, but this does not concern me at all, because the main thing that I can see right now is that Boohoo are growing massively in the UK and the US, and the US could be set to overtake the market size of the UK, and so there's still a lot of growth potential even if the rest of Europe and the rest of the world slows down. They also now have a net cash position of £199 million, which is after they've made all of the investments into infrastructure and new offices, and that was around about £143.5 million of those investments. They've also launched the new Debenhams digital department store, and this is where it gets interesting, because it's not only going to be including fashion, but also the likes of beauty and homeware. This is something that I've been speculating about on the channel for a while now. The acquisition of Debenhams, I strongly believed, as a diversification play. Their audience is older, so it not only does it diversify the core consumer audience from 16 to 30-year-olds to a higher age range, buy up market share, but also gives them expansion into the beauty sector. If they're successful with their beauty products with Debenhams, and they can easily expand this over into Pretty Little Thing, Boohoo, and really they can push these across all of their brands and do very well. Homeware was one that I wasn't actually expecting, although this could certainly give them a lot more diversification, although I'm not sure how strong the growth would be in this sector. But as I mentioned before, this is very much a good example of the economics shared by scale model, which I've just butchered the saying, but it's close enough. This basically means if the business you own or hold in your portfolio is able to scale globally, is it able to keep growing? For instance, Amazon started off as a book retailer, and now look at it, it's a global digital marketplace. Boohoo has the same potential. Sure, they've started with the fast fashion. Sure, their warehouses are going to be close to capacity. But with their expansion and profits, they can then diversify into other sectors, like with Debenhams into beauty and homeware, and this can keep building up. So not only have you got the bull case for the short to medium term with their domination in the fast fashion industry, but the longer term, who knows where Boohoo might be? And the beauty sector is such a huge sector that at the moment Boohoo's valuation, that for instance their end of market size, was only on the clothing and apparel market. Like, beauty really can make this a much bigger business. And I believe this to be so because beauty is one of those, such as makeup, that is very much expensive. And this is something that a lot of women have to buy, and obviously some males. And so it can be a very profitable cash generating part of the business that could probably unlock their profit margins. Although their guidance remains unchanged. Their guidance is certainly on the gloomier side. Boohoo's guidance for revenue overall is 25%. Their guidance for EBITDA, or EBITDA, which stands for earnings before interest, taxes, depreciation and amortization, I butchered that last word, basically their overall profitability, and that is how much they are making, the bottom line for instance, their estimated guidance for that is 9.5 to 10%. I wish this dog would stop barking, it's doing my head in. The guidance is very much underwhelming. However, I believe this is part of Boohoo's management strategy to underpromise and overdeliver. For instance, their revenue guidance is 25%. In the first quarter alone, they've gotten growth of 32%. They might be saying, well, the rest of the year might slow down, But then these first 3 months are probably some of the slowest months in the business, and it will really start to pick up as it comes more towards the seasons coming up to Christmas, and that's where they're going to see a majority of their sales. So to already be undercutting their revenue, I'm not so sure about it, especially if, for instance, I think it has been confirmed, the lockdown's being extended for another 4 weeks. Oh well, Boohoo are going to continue to dominate during that time. Even when all of these high street stores are back open and we've got an economy fully reopened where we don't have to wear masks or whatever, I still think Boohoo are well placed and they're certainly going to outcompete the rest. And we could, for instance, compare this to the likes of ASOS, who did acquire Topshop for a very hefty valuation. I don't really understand this play. ASOS, don't get me wrong, is a strong business model and they share some similarities with Boohoo, but largely are a different company. Their acquisition of Topshop is certainly for the market share, but that was already their core consumer base, that 16 to 30-year-olds like Boohoo has. And so for them to go further into that sector, it doesn't give them that diversification. They might get more growth in the short to medium term, but then they might exhaust that market potential. And so I feel that, for instance, their acquisitions that Boohoo have made into likes of Debenhams, or now the integration of their multi-brand platform, I don't know what I just said, with Burton, Wallace and Dorothy Perkins, is certainly going to really diversify their layout. Some of these businesses, the last 3 businesses that I mentioned, are very much a lot older than me, and this could bring in a much older target audience. Those websites for those brands were generating a few million clicks, and that is something that's going to directly change to revenue. And for instance, once you become acquainted with one of the brands, you might go, okay, you know what, I'm interested in what perhaps Dorothy Perkins has to offer instead of Wallace. And then you may see this sort of synergy between all the brands where they're all linking towards each other, or you're scoping for all of the different websites to find your deals. And if you sign up to Freetrade, my stockbroker, as you can see on the side of the screen, you can get free share worth up to £200 when you click the link in the description down below. And I think this is a really strong play. I think for now they should just hold off. They bought these companies at very low valuations because of the Arcadia going bust. Now, I think they should relax. They've gotten their companies, they can build these up from the bottom, and let's see how they truly do. But then you'll go, okay, Oz, okay, so what about ESG? ESG, aren't Boohoo capitalizing on modern day slavery? And I can't believe how many comments I get that say this. Oh, Boohoo are doing this, they're capitalizing on this, they're unethical. Okay, sure, but if you're listening to sensational media articles, and perhaps not even listening to it, but only reading the title about paying a minimum wage of around £3 per hour, can you really argue about this? But I suppose that sums up who we are as humans. Regardless, it would be foolish to assume that Boohoo is the only group that would have benefited from this form of labour. Sure, I don't think they intentionally did it, and actually I'm very confident that they did not intentionally do it, as it was a supplier's subcontracted supplier. So you as an individual, imagine tracking a global supplier base and working out where they're subcontracting and trying to then sort that part of the chain out. Now Boohoo are doing many things, such as their agenda for change. But then when we compare this to the likes of JD Sports, Primark, or even the likes of ASOS, they all had these issues in the past, yet Boohoo is still under fire because this unethical part means they're a terrible company and this will forever damage their brand. I think not. I think in about 5-10 years, people are going to forget about this. The media articles are going to try and look for clicks elsewhere, unless Boohoo continues to dominate, and then they might try and click off of this name again. And actually, I think it's very much advantageous. Boohoo right now are in the spotlight. They're being watched with a lot of scrutiny under the idea of that they weren't conforming to ethics. Now, if I was in this position, this would be a very much underdog mindset. There are a lot of people watching what you do, and at that point, that is where you perform, or you make and create to outperform. Right now, I feel that this scrutiny on Boohoo is a very good thing, because this means Boohoo have not only got to do the bare minimum, they've got to do much better than all of their competitors. And this makes it advantageous because they're going to be leaps and bounds ahead of their competitors in the ethical area of fashion. This puts them at the front of the markets and makes them a more favourable investment, especially if you are very ESG conscious. They've said that their agenda for change is in line with their commitments, including their global supplier list to be released this September 2021. And they've also joined a fast forward auditing movement, which is a strategy and a new sustainability strategy up.front. They are making some moves, but the thing I'm most interested in is Sir Brian Levison's opinion, because he is the one, after all, that is leading this agenda for change, and he is a well-respected individual. He has mentioned that he remains encouraged by their determination to address all of the issues that the group has taken, and all of the recommendations that they have been taken very seriously, as well as, and I quote, real enthusiasm for the agenda for change and pride in what it seeks to achieve. If he sees this in the management of Boohoo, they are certainly making some huge steps to really improve their supply chain and their business. And now with perhaps the potential of their bonuses to be moved to more ethical style rewards, there is a lot of promise in the company. And in fact, I wanted to go one step further, and I wanted to audit the company, and I wish I had the ability to go into a supply chain and go look at actually one of their suppliers. That's very unlikely. However, what I did do is what I could do, and this is being the consumer. So what I did is I bought a few Boohoo products. I bought a range of products from jeans to a polo shirt, yeah, and I replaced the old Primark shirts, and also likes of underwear. I wanted to see how it all compared up. And if I'm honest, I was very happy with the products I got. Even if I kept only 2 of the 5 products that I bought, I felt that a £50 investment into a share that I hold much more of is more than needed. And what I saw is it cost £1.50 for next day delivery, and if I'd have paid £8, I would have had next day delivery for the whole year. These products, I would argue, are better quality than the likes of Primark, and I would say they are very competitive prices. Obviously, I have said I've had to return 3 of these items. The polo shirts were massive. I didn't realise I'd bought jerseys. No issue through Boohoo, my own mistake. And it was so easy to return. I just put it back in the plastic bags, sealed it back up, taped the original bag over the top, and just dropped it off at a local Hermes drop-off. That's it. I was an advocate for going in store and trying on clothes. But since obviously the pandemic's about, we can't try on clothes. Honestly, online shopping is so much easier. Whilst I will admit Boohoo are very much fashion forward, and that's not something I'm personally a fan of, because I like to keep things simple. I know what I like to wear, and I know what to look, or how I personally feel I look good, and I stick with that. But those that are fashion forward typically are in my age range. They're always trying out these new outfits, and so Boohoo are definitely on the front line of that as well. As I said, with the returns process, it was super easy. Put in the order number, put in my products in the bag, drop it off. That's it. That honestly is a really easy process, and I hate returning things because I always feel that it's going to be an absolute pain to get the products back to them because you've got to repackage it. But with clothing, it's literally just put it in a bag, put it in a non-see-through bag, seal the bag, drop it off. Done. And I'm really happy with what's done now. And in fact, I'm going to be buying more from them. And likely before the next video, I'm going to have more Boohoo products. I'm very happy with the service I've had. I've had no issues so far, prior to my own mistake in the order. And I look forward to what the company can bring in the future. Boohoo is not only dominated financially, but also through their ethical standards and how they are really pushing for change. Yet, the shares are down 20%. From their all-time highs. Sure, back then you could say, well, they were overvalued. They were very much favourable because the pandemic was, well, the ideas around the pandemic was very much uncertain. And so we didn't know how long this would go on for. We were speculating that High Street could have been dead. And so Boohoo were likely very richly valued. However, now they are trading at a very cheap valuation when you can consider where they could be in the future. This is a company that's had a revenue CAGR in the last 2 years of 38%. That is incredible growth. And do you really think it's going to slow down that dramatically? I don't think so. And especially in the UK, where there are very limited options to get for high quality growth stocks that aren't already richly overvalued, I think Boohoo is certainly a top spot to have. Especially in my opinion, when I look for long-term sectors of growth, I do think that e-commerce is going to be one of those at the forefront, along with fintech and a few others. And so it's very much understandable that this is my biggest position in the portfolio. I hold 2,541 shares, an average price of around £2.49 each. Boohoo takes up 33% of my entire portfolio, 1/3 of my portfolio, and I will continue to buy this stock where I see value. This is a company that, in my opinion, is going to dominate in the future, and I feel that right now is a good chance to be buying in, or at least averaging up a position. Despite the rest of the world and the rest of the Europe slowing down, I speculate that this could be due to the fact that these countries are struggling a lot more than we are. We've gone through this pandemic whilst we had a very shaky start. We're now ending up with a lot of vaccinations and are doing quite well for ourselves. With the US, I don't quite know, but they are still growing very well. And so it'll be interesting to see how this plays out. Overall, the US and the UK are the largest two markets. The US has a lot of potential for growth, and it is still growing at 43% revenue growth. And even if the lockdowns are delayed, Boohoo remains well placed to take advantage of it, and naturally it's going to be my biggest holding. I still stand by my price target, which was incorrectly calculated about a year ago, where I said that Boohoo was going to go to 1,000. When I said 1,000, it was 1,000 pence, and this was by the end of 2023. I still stand by this and think they're going to do very well. If you're interested in how well my stocks performed in the last 14 months, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day, evening, afternoon, wherever you are.